So today I'm joined by John Kamin, Executive Vice President and Chief Information Officer at Provident Bank. Welcome, John.
Thank you very much. Good to be here.
All right. So let's start with kind of a macroeconomic perspective. What are some of the kind of mega trends that are affecting regional banks as it relates to customer preferences, behaviors, and other changes? And what are those big opportunities, but also the challenges that comes with it?
Yeah, I think what everybody's seen over the past decade really is just how technology has become so pervasive in the banking industry. And, I tell people all the time, you could really consider banks as technology companies at this point. It's kind of funny, and just for me, there's days I wish I was 25 again, because who would have ever thought banking would be this sort of exciting hotbed for technology like it is? And so I wish I could start over again, because it's an exciting time right now. But, what we're seeing and some of the challenges, I think, is where you have a lot of startup companies that have almost unnoticed. It's almost been unnoticed by a lot of companies that chipping away at a lot of what banks traditionally have done. You go to a restaurant today, here's a Square device, and you're paying for your meal that way, where before that was really something banks pretty much owned, but now that's almost ubiquitous around the country. Anywhere you go, it's now the smaller companies kind of entering in. We're seeing it on the lending side with companies like Cabbage and the other ones here in the small lending area that are chipping away. But I think what's kind of happened is, oddly enough, regulations have kind of been the friends here of banks, where a lot of these small companies realize they really need the partners. So I think the banks that are looking at this the right way really look at these smaller companies as really partnership opportunities. And I think for banks our size, we're a community bank, about $10 billion of assets. That's really how we get the scale that we need to compete. So we look around and it's like, who can we partner up with? And oddly enough, they're starting to look at banks and looking to do the same. So I think it's actually been a good thing at the end of the day.
So John, as I'm listening, one thing that's very clear to me is you're unusual in the sense that most CIOs, your generation, in the baby boomer era, are thinking in terms of how do I kind of navigate away from the fintech evolution and think in terms of really kind of old defensive strategies. But here you're being very proactive. You're saying, I'm not going to necessarily be concerned about these fintechs chipping away, but rather how do I actually work with them to allow for greater distribution and then also give you the ammunition and the firepower that you need without necessarily having the huge IT budget that other big banks like JPMorgan Chase does. Yep. So can you go a little bit more deeply into some of the strategies that you employ to compete with some of the larger international banks?
Right. So, on the surface, you look at a Bank of America that I just saw a statistic that last year they spent $16 billion with a B on technology. And obviously just on a dollar for dollar basis, there's no way we can compete with that. So how do you compete? Well, I think it's three things. One, it's find scale. And the way you find that scale is with partners. So, we look at fintech companies, both startups and then, the traditional providers for banks our size, and make sure you pick your partners well, and we can get scale through them. And that's what we've done. And so as a strategy for our bank at Provident, we know we're good at certain things, and there's things there's certain areas we don't play in, don't want to play in, or we're just not good at. And so that's where we kind of look to partners. So for instance, we really didn't have an interest in getting involved in small business lending. We think it's just a little too risky. It's not something we really do well. So we went out, we found a partner, and they provide the technology, and we have a great fee income arrangement where, we're providing our customers that service. It looks like it's Provident. We provide it, but it goes into the partner's portfolio. We get fee in return. We don't take any of the risk. And so that's kind of a model we're trying to repeat. So, student lending, another area we don't really get that involved in. So let's look for a partner there. Auto lending, we're not doing that today. Look for a partner there. So from a customer standpoint, yep, we're a full service bank, but we focus our capital and our energies on what we do well. And that's, where we want to kind of build those competitive differentiators in the areas we do well. So, I kind of look at it three things that, to kind of get that scale. One, pick your partners. Two, create an innovative environment. And I get a little tired of that word because it becomes such a buzzword and, are you innovative and what do you do to do that? To me, you got to just give your folks a voice and turn the organization upside down. And you know what? A good idea is free. It doesn't matter if you have, $1 or 16 billion to spend. A good idea is free. And I get tired of hearing we have to be fast followers at, banks our size, because you're fast following, fast or slow, you're losing, right? So I really hate that phrase, because if you have a good idea, no matter what your size, you can take it and run with it and compete. And then the third thing is, and I think this is where a lot of banks make the mistake, is they try to be all things to all people. And if you're a smaller bank, you can't do that and compete effectively. So what are you good at? It's really important to figure out what your competencies are and really try to leverage those and, make your hay there, and then use partners everywhere else you can to sort of fill in the gaps.
All right, so a lot of things that you discussed, so I just want to focus on a couple of areas. One is, when you mentioned the term partners, you're really talking about product manufacturers. So within your portfolio of products and services, you're not necessarily originating everything per se, but depending on that slice of product, you're looking to a expert or specialist that manufactures, produces, or distributes, and then, come up with some sort of revenue share model. So that's one piece. Right. The last piece that you mentioned, which is very important, is especially for regionals and community banks, it's important to focus on that relationship, because what the advantage is going to be, it's the geographic and it's a relativity or the proximity to your customer base. Yep. So you don't compete based on the breadth and the depth of products per se, or the presence, but based on the fact that you guys are based in New Jersey and I believe Pennsylvania, correct?
Correct. That's correct.
Right. So it's really focusing on what are their unique needs within those areas and how do you actually enhance those relationships. Mm-hmm. Now, I want to just take a step back. I think kind of broader aspects I want to explore a little bit is banks in general focus on a number of strategies. The larger ones, and including the mid-sized ones as well, they have their internal IT shop and they do a lot of development. And sometimes I'm sure you could come across counterparts that say they develop a whole lot. And the problem is that sometimes they actually do more in-house than actually look for partners. Right. Other types of banks and financial services may actually have innovation labs. And of course, we've seen lots of data around the challenges with the innovation lab and how they kind of choke up in the bureaucracy of the organization and really have difficulties because of the feeling encumbered, and really do not necessarily innovate or percolate those new true opportunities. Then you have companies that are partnering with essentially body shops, the AVPs and the big IT shops, and just pulling in offshore and onshore resources to development just at a different contract variable rate. So you have a lot of different models, including fintech partnerships. What do you think is your kind of right mix, and what's the recommendation that you would give to your peers in the community and regional space?
Yeah, it's a great question. One of the things we talk about, and even with our board, is we're on the continuum of, build everything from scratch to, buy everything. And so, the mantra we kind of go with is we want to be able to buy and augment. So essentially, buy things off the shelf that are recognizable products, not just a straight platform where, you've given me a bunch of bricks and I have no idea what to build with it, but something that, say an online and mobile solution. It works out of the box, but we have the ability through APIs and extensions or whatever to create competitive differentiation within it with a very, very small staff. We don't have a ton of developers. I can't even tell you we have a few developers. But where I think things are going and where it's getting easier to compete is really the whole API explosion and where everybody wants to go. So if, and this is where I think innovation, even for small companies, can play, because everything's laying out there in front of you. And I always use the analogy of a needle and, and thread with popcorn. And then I'm making popcorn garland at the end of the day for the Christmas tree, where if I can pick up the right kernels and put them in the right order, I can create something that nobody else has created, but all the kernels are already there. And so through APIs, I can kind of knit things together in a manner that, might actually create something new and different. I was had heard an interesting talk recently about, and they were sharing how the bicycle was actually became popular after the automobile was really made popular. Like all the pieces were there. Models of bicycles have been around for years, but it never really got popular until somebody figured out how to put it all together. So I kind of look at the world that way, and the API world isn't quite there yet. It isn't easy enough yet for companies like us to fully exploit, but it's getting there quickly. And I'd say the one area we're kind of being held back is with the larger legacy firms where, community banks our size typically run core software that was built in the 80s. I always make the remark that when I see an assisted living van, that pretty much means we're going to interview an administrator for one of these things, because that's how old the technology is. So, that's kind of a bit in our way, but even they are starting to get the message that for them to compete in the future, they need to be open and they need to be flexible, and they need to allow banks our size to have the wherewithal to get into those systems, get the data we need, knit it together with other things that may be out there that we can buy from, again, partners or off the shelf, and build customer experiences and journeys that meet our customer needs and actually draw people to the bank. So that's what we're trying to do. And I think APIs are really going to be the way banks our size, compete in the future.
John, this is such an interesting conversation, because what you're talking about is when it comes to middle and back office systems, you guys are relying on the likes of FIS, Fiserv, and others for kind of the bread and butter. And you're right, it's based on 80s technology, and I think they're running on COBOL or something really mainframe old technology with a GUI layer that tries to look more modern, but really underneath it, it's still the old stuff from the 1980s. The API service is a very interesting notion of what you're talking about, is that just like in the traditional kind of development world, you have open source stacks. So these are building blocks that it's available to everyone, but you're building on top of that your own recipe, your own set of IP that allows for you to be able to give that flavor, that competitive advantage that someone else may not have. So an example of that is being able to consume, let's say, artificial intelligence as an API service, so that you simply basically connect it to your data store, and the AI service will then start to look for predictive analytics and pattern recognition. So the fact that you can actually start to put in those API capabilities into something in a very agile fashion, I think that's a really great strategy. Now, one question I'm going to ask you is, most companies, small, medium, or large, especially in financial services, they're very risk averse. So when it comes to API services, sure, you got the IBMs and the Microsoft and the Googles, but you also have the smaller startups. So what's your risk appetite in terms of who do you like to play with in your ecosystem?
Yes, so the partners we look at, number one, one of the first questions is, what's your API strategy? Do you provide APIs, and can you quickly have connectors into the core that we use? So, if the answer is yes, we're going to be able to quickly test that small startup or whatever company it is, and have a very quick cycle of, is this something that's going to work for us or not? And so that's really what we're trying to do. It's the other odd thing for me in my career is that I've gotten to a place where every conversation when it comes down to contracts starts with, okay, I love your product, but let's start the contract negotiations here with how are you going to allow me to get away from you? One of the things that keeps me up at night is getting handcuffed to a platform. And every vendor wants to be a platform. They don't want to be a solution. They want to be a platform. Salesforce is the poster child for this and has done extremely well turning a CRM solution company into a development platform, and where you go in with them. Are you handcuffing yourself here a little bit, where to ever leave them becomes so almost impossible? And it's our current legacy providers. It's the same thing, right? We get handcuffed. So I'm always starting those conversations with, how do I leave you in a manner that that makes it possible, and put it in the contract on how that's going to happen. So, again, back to your question, really looking at partners that have those APIs that are going to help us connect back to those legacy cores and be able to do it in a fashion that we can fail quickly and go to the next one. So, we're going to build a small system integration staff that work with APIs, and the idea to get that flywheel going faster and faster. Find a partner, let's do a test, at a few zip codes perhaps, and see what the success factors are. Is it working great? Is it not? All right, next. We have a fintech committee that we established that, they're looking at companies every month to see if there's a there to bring into the bank and do, some testing with them. So, in some respects, we're just starting this journey. I can't sit here and tell you we're there yet. But, I think here in the past year, we've made a lot of progress in doing that. We've clipped a lot of strings with our core provider to kind of make it a transactional database we stick in a closet somewhere, and, having some API capabilities to get in and data into it and out of it. So here I'm really looking at 2020 to be where we can start to leverage this and go a lot faster. You mentioned data, and we're doing a lot there. We see that as a core competency that we wanted to grow in the future. We think that whole predictive analysis, let's stop creating reports that are snapshots that look backwards. Let's have predictive analysis that looks forward. What are the 10 best, what's the next best product kind of thing we've talked a lot about in the industry? What are the 10 most likely loans to default based on historical correlations that we find? We're doing a lot of that today. And again, it's not something you have to spend a lot of money on. It's just having the right people, asking the right questions, having the right partners that can help you with the back-end infrastructure. And like I said, it's an exciting time, and I wish I was 25 again.
I hear you. Well, I want to go back to that point that you made, which is the concern that keeps you up at night. The fact that when you are entering into that RFP and that contract negotiation, you're asking the question, are we going to be held captive by this platform or solution provider? And I think one of the key strategy is around the data and who owns that data. Because if the vendor is housing the data on their servers or the cloud, public or private, they essentially own that data and control it. So the fact that you can have an integration hook where their capabilities are flowing in, but the data resides on your side, you control it, you own it, then it's a lot easier to unhook it and get another API service that provides a similar service down the road, rather than having to be subject and be held captive. So that's one piece of it. The other piece of it is there are startups and companies that will go in and apply capabilities like some of the machine learning capabilities and deep learning that I was mentioning. However, in some ways, you're actually providing them a service, because in order for their algorithms to improve, they need data. Mm-hmm. So even though they're not necessarily directly using your data to glean, let's say, specific insights about your banks, they're still teaching the algorithm, their supersets. So in effect, you're basically allowing that data to be used by their systems for training purposes. And something that I think most banks don't necessarily fully understand or appreciate. The other factor we didn't really talk about is GDPR, which is Europe specific, but a lot of that is starting to come into the general compliance and regulatory framework within the US and just broader non-EU as well. So, API services are great, but as soon as you hook that into your system, there is potential, not just security and other aspects, but there's a whole slew of privacy issues that needs to be thought through, making sure that it's not just capabilities, but also consumer protection that needs to be in place.
Yeah.
How are you rationalizing all of these?
How much time you got?
Yeah.
It's the whole data discussion and the ownership issue is fascinating to me right now. And I think, what you're seeing with Facebook and being dragged into Congress, Google as well, and the volume of data that these folks have. And again, banks, it's the same thing. We have tons of data. We spend fortunes on cybersecurity and everything else. But the ownership issue of, people give it away for free. And I think we're at a point where we're going to start to see some of that change. I think you're seeing some legislation in California, for instance, that's kind of touching upon that. But, where that winds up going is really tough to answer. And again, we're a very regulated industry, so I think we're looking at and it's getting more and more strict, and we try to stay ahead of the curve every day with that. It really takes a lot of thought and a lot of energy at the bank to kind of keep up with that. But it's such an important point. But honestly, I don't have a good answer for you as where that's going, other than I think you're going to see that ownership over time start to go back to the customer where it should be, and where they own the data. They're very aware, and it's like, hey, I'm providing you all this information about myself. What am I getting? What am I getting in return for that? I think you're going to see that discussion happening sooner rather than later. But then again, the counterpoint there is you see a younger generation that just gives that information out willingly, and all that data is sitting out there. But I think we're going to see a backlash where people are going to finally get it, that, hey, I'm providing you something of value and I'm getting nothing in return. What are we going to do about that? So, how that's going to affect banks in the future will be interesting, but I do not have a good answer or a prediction where that's going to wind up.
So we have just about 30 seconds left. Share with us what was your greatest product innovation failure, and what was a lesson learned?
Failure, one way I would define that is like, are there really any failures? Because if you fail, you learn something. Hey, that didn't work. Let's do something else. And I'd rather fail than just not make a decision whatsoever, because no decision is kind of a decision. And to me, that can be the biggest failure. As far as one that comes to mind recently, we did work with one fintech that the ability to deliver became very suspect, and it got to a point where we had to threaten to pull the plug. And I think one thing that taught me when looking at other partners going forward is that you really need to assess the ability of that company to implement. And a lot of these companies will use third parties to do their implementation. And we've had situations, and the one I'm thinking of in particular, where they were a victim of their own success. It was a very good product, but they became very successful very quickly. And then having people that knew what the heck they were doing to assist on the implementation became very, very scarce. And you start working with the third and the fourth string, and it just doesn't work out as well. So that's something I've become very mindful of, is who's their partner, who's your partner's partner that's going to help implement this, and do they have the horses in the barn that know what they're doing and can get you to where you expect to be. So that was my learning out of that, and just something I take forward now in any kind of partnership assessment that we do.
So I've been joined by John Kamin, EVP and CIO at Provident Bank. Thanks for joining.
Thank you very much. It's been a pleasure.